hey, we're done with the flip, but we're still making money. And as long as we own this property and it's rented, we're going to make money forever.
Move over, baby boomers. It's time for Gen XYZ. It's time to stop waiting on the world to change. It's time to be the change. It's time to stop thinking about how your life can be better. It's time to start taking action, massive action to improve your life. Join Zach Winter and Markadair Rios every week as we learn how others had the grit, determination, and conviction to 10x their lives, and as we explore ways that can help you 10x your life.
Hi, and welcome to another episode of the 10X for Gen XYZ podcast. I'm Zach Winter.
And I'm Markadair Rios.
And today as our guest, we have Lee Yoder. Lee is the founder and managing partner of Threefold Real Estate Investing. And Lee, welcome to the show.
Yeah, thanks for having me, guys. I'm excited to be on.
Yeah. Excellent.
So Lee, I'd love to start off with having you tell us a little bit about what you were doing before you got into real estate and talk about that transition over into real estate investing.
Yeah. I like telling the story because I didn't do anything special. So I think it's very relatable. I was doing home health physical therapy. I'm a physical therapist by trade, but I got in with a company. It was like a startup company and actually came into the office as a clinical director, managing a bunch of therapists, but then it was really moving more into a director of operations type role. And I was doing no physical therapy at that time. I came in, I was in the office full time, just kind of, trying to build the division, kind of doing projections and numbers and just really loving that. So realizing, it feels like this is more what God made me to do is something like this. I didn't miss doing physical therapy at all. Because when I was doing the home health physical therapy, that was great for my family. I had a lot of flexibility. I got to make my own schedule because basically I'm just calling older folks, setting up a time for me to come out and do a treatment with them in their home. So it's just up to me and them when I schedule. So I could take a day off anytime I wanted and not tell anybody as long as I, saw my patients the other 4 days of the week or something like that. And, probably working 40 hours, maybe each week and no stress. But the problem is, again, I just don't think that's what God made me to do because I was just really bored. I mean, I wasn't challenged. I wasn't fulfilled. So yeah, the company that I was with, that startup, I was doing home health for them. When they asked me to come in the office, I jumped at the opportunity because I'm like, I need more. I'm bored. I did that for a whole year. I say a whole year. I'm really sounding like a millennial, right? Say I did a job for a whole year that I didn't like. But they asked me to come in, came in. So now I'm seeing the other side, guys. Like I'm really enjoying my work. I'm challenged by it. I'm fulfilled, but now I have like very little flexibility. My wife and I are starting our family. We've got 2 young kids. She stays home with the kids. She's ready for me to be home, to come. And I want to be home. I want to be home with the kids. I want to be there for dinner and stuff. In my job, it wasn't terrible. There's people that have it worse, but like after doing that for a few years, my wife and I just felt like this isn't really the life God called us to. But I didn't want to just go back to home health physical therapy, which again would be good for the family, but like I just couldn't do it for long term. So somebody handed me a real estate book. Actually, a buddy of mine, and actually he's my partner today. He was working at the company with me. We were building that division together, and it was kind of an obscure book, but it kind of led me down the path. And read Rich Dad Poor Dad, and so I started to see like, okay, maybe there's a whole different way to do this. Maybe it's not just for me like doing home health physical therapy or climbing the corporate ladder and kind of feeling like kind of both extremes. Like maybe there's a way I could strike out on my own and do something and be on the entrepreneur side and work really hard and enjoy my work, but also be able to control it a little bit so that I can, have the time at home and prioritize my faith and my wife and my kids when I want to, but also have fulfilling work. So that's what kind of turned the light bulb. And so I left that corporate job, took about a 30% pay cut, went back to home health physical therapy, that, kind of steady, but boring job, but started real estate as a side hustle.
And you did that switch so you could have the flexibility time-wise of being able to do your real estate side hustle.
Exactly.
That's great. Actually, that's really smart.
Yeah. So did that in 2016. Took me a year to get my first one and started with a flip, but yeah, that's kind of how I got started. That's my story of why I wanted to get into it and how I got started.
So you started with doing a flip. So you bought a house, fixed it up, and sold it.
Yep.
Did you do something else while you were flipping that, or you wanted to see that full cycle and then jumped into the next one?
Yeah, good question. I mean, I had the full-time job while we were doing that. I was, doing physical therapy, so doing that on top. And what was interesting, I took, like I said, I took a pretty big pay cut to go from the corporate job where I was, climbing the corporate ladder, just back doing physical therapy. And that flip made about what I took as a pay cut, right?
Oh, that's great.
Yeah, but it was just kind of that perfect picture because I'm listening to podcasts like your guys's, and people were speaking into me that, hey, flipping is not investing. Flipping is just another job. You trade your time for money. And it was just such a clear picture because it was like, okay, I had this really busy corporate job, left that for a less busy job, but added a flip on top of it. So I'm kind of that busy again. And I made back what I lost, but like, I'm really just trading the same amount of time for money, but I'm just doing something different. Now, it got me into real estate, so I don't regret it, but it just took me to realize like, this is just trading time for money. This is no different. This is not investing. So I only did one flip. Yeah. Mm-hmm. And I did see that all the way through, Zach. Luckily my wife is like much, slower, more regulated. Like she's not a jump and build a parachute. She's like, no, let's build a whole parachute. Let's let 10 other people try it out. And if none of them die, then we'll jump. So we're a little bit different than that. So she's like, hey, this isn't what you told me it was going to be. Like, this isn't that passive income you told me you've been doing. Let's rethink this. And I said, you're right. Okay, let's rethink it. And so we didn't do another flip.
So was the flip you're all on your own, or did you have a partner? Did you have any passive investors?
Her parents actually did kind of get into it with us. We took out a HELOC on our house. We had a bunch of equity. The guy that was doing it got fired from the bank and it didn't come through in time. So they kind of jumped in and did it because we bought that on an online auction. So we had to go all cash to buy it and do that. But and they helped us a little bit, but technically we didn't do it our own. We could have, and we kind of did, but yeah, just basically us forging our own path.
That's great. Great experience. And so what did you do next?
Yeah. So then we got a duplex and it was similar. We bought it at the county auction, so had to go all cash, used our HELOC again and basically flipped that, but we rented it for a little bit. So did the rehab, went much better. I had better connections. We kept the money we made from the flip. We didn't need that because again, I had a full-time job. And so that money went into it. So it felt like we had a little bit more cushion. So a little bit less stress on us too. Feeling like we're building up a snowball here a little bit. But then we rented that for a few months. So we got, I was my own property manager. I was a landlord and got to kind of experience that, but just renting that even just for a few months before we sold it, we got to see that passive income, that residual income that, hey, we're done with the flip, but we're still making money. And as long as we own this property and it's rented, we're going to make money forever. And so we're like, my wife's like, okay, this is more what you were telling me about. Like, this is great. Our income from the renters exceed our expenses every month. And as long as we own it, we're going to make money. But then also we realized, and especially like, I don't like being a landlord. So I kind of knew then, like, I'd like to go bigger, get into properties that make more sense to have, somebody manage it for you, a professional property management company. So we sold that too.
So yeah, you sold that. Yeah. Go ahead, Mark.
I was just going to say that, I follow a really, really similar path to you. And it feels like we kind of have the same kind of mentality in terms of, intuitively knowing that real estate is kind of a wide field and there's lots of different things, but being able to chunk away and start at the beginning, what everybody tells us is the beginning, which arguably, wholesaling might be before flipping, but, and then moving along and realizing, okay, it's not for me. I'm going to try this. Let me try landlord. I hate it, by the way. I hated landlording. I was so bad at it. It's funny because, we're doing it at scale, but being that one-on-one guy, horrible.
What else is interesting, and because I've also had a similar experience in starting off with single family, and I didn't flip. I started buying single family homes around the country and just renting them out for the cash flow. But we all started buying single family. You quickly upscaled to a duplex, and then as we'll talk about, you went bigger and bigger. But it's kind of this mental thing where you think you need to start small instead of going
Sure.
big immediately. But then once you start small, you realize it makes more and more sense to scale up,
Yeah.
and your returns scale up commensurately with scaling up in size.
Yep. Yep. Yeah. And that's why podcasts like your guys' are important, because like I said, I was already listening to so many guys that had been down the path before, guys like you guys now telling others. So again, that's the reason it took me only one flip, because I was already listening, guys like, hey, I know you think you got to start small, you don't, you can go, so I still did, started small, but it just took me one. And I was like, okay, I learned that lesson. What these guys are saying is true. It's not investing. And hey, actually the duplex costs less, to buy than the single family. And then I put even less money into the 16 unit that I bought, cause I had an investor. So, but that's what's so helpful about listening to podcasts and like your guys and reading, is that you hear people that have done it, and then you kind of go out there and you're like, okay, yeah, this is right. I can do this.
Absolutely. 100%.
Yeah.
And that, actually we, there's a kind of a famous multifamily guru who actually had a saying, basically, because that question always came up, how big should I go? Should I try to take down a 10 unit, 50 unit, a 5 unit duplex, and and there's nothing wrong with playing in the small multifamily arena, right? A person can make a really good living if they're, especially flipping some of those too, doing sub 25 unit properties.
Absolutely.
Especially if they're local, if they're around and they can manage them themselves, great.
Absolutely.
But he basically put it this way: you start as big as is comfortable for you to be able to do it, right? And what that meant to me really was, I could conceive at the time when I was getting into commercial multifamily, I could conceive of doing a 35 to 50 unit property. Like I could see that, but I couldn't see myself doing a 100 unit property at that time.
Mm-hmm.
This was, and so I really was able to dial into that comfortability range. And then when I hooked up with a partner, it made it much more comfortable. So that 50 units was like, yeah, we could do that all day long, because then I was starting to learn how to, and we'll get into this with you, but starting to learn how to create investment opportunities for other people, where they are passive investors, and we act using our skills and expertise as active investors, basically asset managers,
absolutely.
All that stuff. So,
yeah, I agree.
So let's go back to your story, Lee. So you held the duplex for a few months, and then you sold it.
Yep.
Yeah. And then what was your next one?
Then started getting more and more into multifamily. Joined the apartment focus group of our local RIA. So I really started to learn to underwrite, and was kind of mentored by the guy running that group. And then found a 16 unit on LoopNet that was 20 minutes from my house, an old school building, and made an offer. Ended up getting that property. So I was doing like something every year. So I left my job at the end of 2016. I bought the single family flip at the end of 2017. Bought the duplex at the end of 2018. And then in the fall and into winter of 2019, I bought a 16 unit, an 8 unit, and a 10 unit. Wow. So I ended up buying 3 that time. So got 34 units that fall. Used a property management company, same one on all of them. And kind of acted as the GC on those, like really kind of running the projects. But built up that little portfolio in that short time, and started working on turning those around.
Yeah,
that's great. So at that point, you really had the confidence in feeling confident enough to get out there and start scaling up and buying multiple properties and increasing the unit count of each one.
Yeah. And it's what you just said, Mark, with partnering, going to that apartment focus group, kind of like, a meetup, and being mentored by the leader, because I would send him some property. Like once I underwrote him, I'd say, hey, here's my underwriting. What do you think of this? I'm thinking about making this offer. And just having him to say, yep, looks good. Okay. Make the offer. Hey, they countered, what I'm thinking about this, and he's like, hey, just stay with your price. And so I stuck with it, and they accepted it. Okay. Mark, what do we do now? He's like, well, they'll use the so he gave me a lot of confidence, and that just, I ended up giving, he just did it because that's, he's a great guy, but I'm like, I want to give you 10% of this deal. And you come in on it with me, didn't bring any money or anything, but he helped me so much. And I wanted him to keep helping me. So I just, gave him 10% of the deal. But it's one of those things, guys, as like once you do it once, the day is actually the day we were closing on that deal. And if you guys, know Michael Blanc, he calls it the law of the first deal. So I was on his podcast and I was telling him like, man, I'm a perfect example of that, because the day I was closing on the 16 unit, we were, actually celebrating, and it's kind of still an infamous story for my wife, as I was kind of explaining. She's not quite as risky and as a gambler as I am. So we're out like to dinner with her parents, like celebrating, because they went in on this one with us, the 16 unit. My buddy from church found an 8 unit that was a great deal. And I said, honey, I really want to make an offer on this 8 unit. And, she's, why can't you let me get comfortable? I just got comfortable with a 16. So I said, I promise you, it's that good of a deal. And it was. We offered full price that day and got that under contract.
Nice.
So yeah, but guys, that mentor and having somebody working with me, taking me through the process, just going through it one time, as soon as that 8 unit came up, I just had so much confidence. I'm like, I can do this again. I'll literally just do everything I did for the 16 unit, use the same LOI, use the same contract, use the same inspector, and property management too. For me, having a property manager as your partner, like, for me, taking down a 16 unit was just huge. It seemed so crazy. Like we've talked about, taking down a single family, it's like everybody owns a house. Not everybody, but a lot of people that own a house. So buying a second house, yeah, seems kind of crazy, but not that different. Buying a 16 unit, we didn't know anybody that owned apartments at the time. I mean, nobody. Wow. So, my wife and I are like, she kept saying like, people don't just do this. And I'm like, well, they actually do, but we just don't know any of them. there are people out there.
That's awesome.
But once you do it, then it's not so crazy. Oh, and what I was going to say about the property management is, I hooked up with a property manager, and they're pretty small. They manage 1,000 units in Dayton, just north of Cincinnati, where this property was. But, for them taking on a 16 unit, it's like, that's nothing. They already have 1,000, right? So it just gives you a lot of confidence and makes you very comfortable when you realize, hey, day one, taking over the property. I mean, it was just so daunting. My wife and I are like, what do we do? How do we get the residents to pay us instead of the previous buyer? How do we take care of the residents? What if a toilet goes out? We don't have to worry about any of that. None of it. It's right. It's all in the property. So, between my mentor and the property management company, it felt very doable. That the first one was still really scary. But by the time I got through that, the second one was like, I know the paperwork. I know how this process works. I've got the property management company. They're the ones that are going to manage it. So all I got to do is make sure it's a wise investment and come up with the down payment and have enough reserve, right? And go. So that's what it takes to get comfortable, and you can start moving pretty fast.
You just brought up a really thing that kind of congealed something with me, which, and maybe I'm wrong about this, Zach, you can inform this too, which is, if I look back over all of the stuff that we've done, and we have tons more to do, but it seems like in one way you can look at it like it's a series of different kind of focuses each time around. Like starting out, with my single family, I actually had to focus on everything because I was doing everything, right? But then kind of scaling up and moving into our multifamily stuff to now where we're doing larger commercial properties and office properties and things like that. And the focus that we have, that we're able to peel off to other people, whether it's just the nature of the scale and the business and everything, like my day-to-day looks nothing like my real estate investment. We're doing the same stuff in a lot of ways, but it looks completely different than way back when.
Well, I think as you grow, your role grows too, and it can get more refined. We've kind of identified internally what our respective roles are, and we really focus on that. But we also realize it really is a team sport at whatever level of real estate. If you really want to grow, I mean, you could do it all year round, but like, as we've talked about before, you can have 100% of the pie, but it's going to be a much, much smaller pie.
Yeah, for sure.
Or you could realize that to really do well and have exponential growth, it's a team sport, and you need to bring in other experts in their respective fields and not feel like you have to do it all. And once you do that, it's quite liberating because you can tap into their expertise, and that helps you grow even quicker.
Yeah, I agree. Yeah, I made the same decision. I mean, I could have stayed small with the small stuff and kind of, done everything myself. I mean, and if you want to manage your own properties, then add that, and you kind of do everything, and you get to keep a lot of cash flow, and you can make a nice little portfolio. Again, like I think Mark, you said, if it's local, you could have a nice little portfolio, but it's going to be capped out. I mean, your potential is limited. If you really want to go big and see some of that exponential growth you guys talk about, I think you got to go bigger.
Yeah, the monopoly way. I mean, that's really what that comes down to. It's just ingrained in us, right? It's monopoly. Single family, get 3 of those, turn them in for a triplex, get 3 of those, turn them in for a hotel. That's what it is.
Yeah, absolutely.
And so it takes a long time though. And so, all right. So coming up to 2019, so did you hold, what did you have? You had 16, you had 8 plus another 10, right?
Yep.
So, and then did you add any more after 2018 into 2019, or you just stayed right there to figure things out?
Got those at the end of 2019 and basically took the whole next year to turn them around.
Right.
I mean, we I spent a lot of time out there. They were distressed properties. I mean, the 10 unit was 60% vacant when I got it. We put 90 grand just into the exterior and some of the big projects. So I spent a lot of time there doing my job. And the market went crazy. I mean, we actually threw a flip in there. That was the only other thing I did. We did do another flip. And that went well and was fun. But the market went crazy. And I'll tell you guys,
crazy good or crazy bad? You're talking about
crazy
COVID.
good, right?
Okay.
I mean, we were in the middle of flip when COVID happened. We freaked out, thought this is going to be horrible for real estate. And I mean, I just wouldn't have guessed at the time. No, it's going to be really good for real estate. Like it's just been crazy. You guys know. But turn those around. And so, a lot of people, myself included, you have this idea like, okay, I'll build up a portfolio and eventually the income from my portfolio will replace my income from my work, right? That was the goal. Again, that's the dream I sold my wife on. And even if it didn't replace my income, because we made more than we really needed, we were kind of just trying to hit the number. For us, $60,000, that would have been enough to pay our expenses. Okay. So we wanted more than that, but I felt like, man, if I can hit that, well, with those 34 units, we bought them pretty well. I had a big chunk of them, just brought in a couple partners. Again, this is an example of how you can build up a nice portfolio. We were like half of the way there to our goal with those. But that was still like too slow for me, because by this time I'm like all in on real estate. I'm not like hating my job, but I just want to do real estate so badly that it's just making it worse and worse. So I actually decided to sell my whole portfolio because really the calculation I made, guys, was, okay, I can make 30 grand a year off of these properties, and that's great. And sure, there's days I'm like, man, I wish I still had those. But because they had so much equity in, because we did so much in the market, we just got lucky and timed the market right. We could kind of take like 10 years of that cash flow today. And so I decided to do that. And instead of building up, 60 grand a year of income from my portfolio, I sold and kind of gave myself like this 3 to 4 year cushion to get the business going. Nice. So I sold, had this big cushion, put it in the savings account. Worst place to put money. It bothers me that it's all in there, but it gave us this cushion so that I could quit my job. And now I kind of have this runway to go out and now go after that goal of, nice, replacing my income with passive income. But now I'm going to go bigger. And now I've got like 3 years to like really get it going. So that's what I did at the end of 2020. I left my job as a physical therapist.
Nice.
Lee, when you sold, did you consider the option of 1031ing, or was it just too complex to try to 1031 out of 3 properties into one larger property, for example?
No, I did consider it. I think I didn't know it well enough to really consider it back then. I think going back, I probably would have, because all of those investors they took that money, invested with me again. So could have definitely potentially done, because that's the trick, right? Like they don't even get their initial money back. It's not that they just don't get their, and they had all the money in. So I kind of wish we would have done that. Although I needed that profit. So I kind of wish we would have done it with at least one, right? Because
Yeah.
I needed that money to
You wanted the cash. You need the
give
liquidity.
my wife and myself, the stability of, hey, if we do nothing over the next couple of years, we're going to be able to pay all our expenses, and then I'll just have to go back to being a physical therapist. My wife's an RN too, so she could always go get a job. I mean, everybody knows how badly RNs are needed. So we knew we had that. But yeah, that's a good idea, Zach. And knowing what I know now, I do wish at least one of those I would have done at 1031. But long-term capital gains are still pretty low today. I think they're probably going up. It's probably one of the areas they look to raise taxes, maybe. So sometimes it's like, I just pay the tax and then I don't have to worry about it again. But yeah,
I don't know if they're going to go up because I don't think anything can pass right now. So I think real estate investors are going to be doing good for a long time.
I think so. Yeah. And Republicans are going to probably take the House and the Senate, and so which usually is good. I think the less our government does, usually the better.
So now you mentioned before when we were talking earlier that you actually got into, you just closed on a 188 unit property as well. Is that what it was, or
no? 3 different properties. So
3 different properties.
Yeah, in 2020 I sold those, and this year we really, again, those were all like JV partnerships, which is a great way to get going, start out just 1 or 2 partners on each deal. But this year we started syndicating. Sorry, I keep forgetting we're already in the next year. But in 2021, in February, we bought a 45 unit. In June, we got a 47. And then in December, we got a 96. So
and you raised
188 altogether.
And you raised capital for all of those from separate investors, from LP investors, what we call syndicating.
Yeah.
506B.
B, yes.
Cool.
And were you, so did you team up with some other GP general partners to kind of make it happen? Just one.
I brought in a partner kind of toward the end of 2020. Again, referencing back to the guy that was working with me at that startup company. We were building a division together. He had left that company. He's actually more of like the stay-at-home dad, where his wife's a dermatologist. So he takes the kids to daycare and to school and stuff, and then he has the day to work until he goes and gets them. So he was kind of in a position where he didn't need to be paid today, because when I said, "Hey, do you want to partner and do this?" It's like, I got nothing to offer you. We might do this and make nothing. And not many people are in a position to be able to do that, but he was, and he's like, yeah, I want to go after this with you. So I just brought on one partner. So just he and I.
Very nice. And how was that experience raising the capital for those 3 deals? Was it fairly easy? Did you already have inroads with your investors, so you had word of mouth going, or how did that work?
It's definitely been a struggle, but we did it in little chunks. So on the first one, we only had to raise $550,000. And that seemed like a lot at the time. But again, I had already done a few and invested with my in-laws, my parents, a buddy from church, and we had made them some good money on those. So they all put money in. So it was really just very close friends and family on that first one, just 550. Then the next one was 1.3 and just seemed monumental. But I had, really done a little bit more. The RIA, again, the Real Estate Investment Association in Cincinnati, had several people from there. And actually, full cycle, the guy that mentored me, that led the apartment focus group, we had to bring him in on that 47 unit because we assumed a Freddie Mac loan. And they want to see a certain net worth and liquidity, which my partner and I did not have. So he helped us on that. And he helped raise a little bit of money because he is, since he's leading that group of the RIA, he's much better known at the RIA than me. So he brought some people in from the RIA.
Nice.
And the reason that was nice, guys, is because now those people know me really well and have told people. So it was on this third one that we really started seeing the organic growth.
Good.
Where people that had invested with us on those first 2 deals are now telling other people that they should invest with us on our next deal. And then also it's just here lately, some of the social media stuff I'm doing, some of the kind of marketing type stuff we're doing is bringing in some people that I don't even know, being on podcasts, things like that. That's really just kind of started to click. So we had to raise 1.65 for this last one and didn't have help. And we did pretty well.
Nice.
We did it, didn't have to go to any extremes and bring anybody else in or anything like that. So kind of just nice stair stepping up, which has helped.
That's fantastic, man. That using that key principle to sign on the loan is really kind of people use it, but it's overlooked a lot of times, and it presents roadblocks for people to really kind of conceive how do I buy a $3 million property?
Right. Yep.
And you intuitively figured that out through your conversations, through your mentor. We figured it out, in a lot of ways. Yep. And lots of others have. And it's really critical because there's a space in there that if you don't figure that out, and that's the partner thing, it's going to be hard for you to make that jump, because it's one thing to build a $1 million, net worth and liquidity to sign on these loans or even lower. And it's another conceiving like, oh, I'm going to have to pay, it's a $5 million deal. Who do I like? How do I don't even have the net worth. So forget it. I'm not going to go that big. I'll just play here,
Yep.
And the great thing is that a lot of these loans are non-recourse when you're talking the agency loans at that size. Yep. And non-recourse means that there's the guarantees don't come back personally. So people who are signing on the loans feel more comfortable doing it. And that's where you can start to offer equity in exchange for their balance sheet.
Yep. Absolutely.
And that's an exponential growth, tactic right there.
Yep. Yeah. Don't let these roadblocks stop you. Just find out from somebody else who's gone around the roadblock before. Ask them how to get around it.
Yeah.
Yeah, that's exactly it.
Yeah.
So do you currently still hold those properties?
Yes. Yep. We're, because, this February, we're coming up, that'll be a year that we've owned the first one that we bought. So we're under a year on all of them. And that one's going really well. So we own those, and we just kind of want to do more of the same this year. Actually, getting that 96 unit, being right there at 100, right there near 100 units, we are seeing, guys, some of the economies of scale that people talk about.
Yeah.
And man, it does kind of ruin you. And I want to just buy 100 units and more now. It's a very, it's more competitive in that, like, you're dealing with bigger money. So I don't know that we'll just stay there because, man, the prices people are willing to pay for 100+ units is just hard to compete with. Whereas,
it's a little
big
crazy
money
right now.
Right. Yeah. That big money won't go after a 40 unit in Dayton.
Right.
But they'll go after a 200 unit. I'd much rather own a 200 unit, but those big players that'll pay, a 4 cap, I don't want to compete with that. So we'll see. But man, when you get up there, there are some differences because we have one girl that's dedicated to that 96 unit, and just having her own that is so much different than the property management company, again, that has 1,200 units, and we have 45 of them over here that they manage and 47 of them over here. And it's just like another building for them versus they dedicated one girl to her 96, and that's her baby. So when we call her, she's all over it. I mean, she's so on top of it. That's the benefit of having and same thing with our maintenance guy. He lives down the road, and that's his only property, and he's there every day. So there's some real benefits from that. We really like that one.
All right.
Yeah, that's great. One of the interesting, and there's so many different ways to invest in real estate and different approaches. But one of the things I like about your approach is you're in an area where it makes sense to do stuff local and to be driving distance essentially from all of your properties.
Mm-hmm.
So that's
I feel very blessed. I mean, especially at this part of the market cycle, right? I mean, we're not going to see appreciation here, but I don't think this is the time in the market cycle where you should maybe really be focusing on appreciation because we're pretty high, right? We've seen a ton of appreciation. So maybe we'll see more. We could definitely see more, but if we don't, we're in a pretty good spot because that's not what we're buying for. So yeah, we like it here for right now.
Well, and that's an interesting thing because also just in terms of setting yourself up to get more deal flow, being a local player such as you are with a track record in the closers circle, there's a lot of benefits for really playing in one market, in your local market, knowing, I'm sure that you have a really good grasp, at least in the markets that you're around, of what all the other properties are kind of doing, because you probably comped them out at a certain point, right? And maybe even driven them or toured them or whatever. And so, there's something to be said about when those brokers know you, or even when sellers know you, you start to get deal flow that doesn't even hit the soft market or even the main, listing market, right?
Yeah. Yeah, that's what it is. Because to me, I mean, the brokers really control the deals right now. That's my experience anyway. So, yeah, being able to really have a good relationship with these guys because we live here, because we go to lunch together, because we're at the same golf outings, it really helps. I mean, they have a lot of sway usually with the seller on who the seller accepts. And on that 96 unit, we were outbid by $150,000, which on, $6 million is not that much, but that's still $150,000 of profit, extra profit, right? At that point, it's all profit for the sellers. And they decided to go with us. And I think a lot of it was because the brokers were telling them how good we're going to be to work with, because we had just closed the deal with those same brokers. So that these guys we know they're going to close. So, you can be assured of that, and they're really good to work with. They're not going to try to retrade on you and things like that. So because they know us, trust us, like us, they're really advocating for us. And it's huge. It's, they have a lot of sway in who gets the deal.
That's awesome, man. That's
great.
Now, do you see yourself, I know we just talked about being local, but do you see yourself, and maybe you do this secretly, because a lot of people do, looking at properties in other markets and kind of,
well, just for deal flow, right? I mean, there are only so many deals trade here. And especially if we want to go big. So I would not buy a 40 unit in any other market. I just don't think it makes sense. But now that we're, our eyes are open to 100 and 200. Yeah, absolutely. And probably it'll start small. So, like the brokers that brought us our last two deals, they'll do deals down in Northern Kentucky and maybe over into Indiana. So probably start just with that, with some of these same brokers that we've been working with. Maybe they show us a 200 unit down in Lexington, Kentucky, which is a market we'd like to get, that's probably how we'd get down there, through the same brokerage, a little bit further away. It'd be a different property management company down there. But again, when you have 200 units and you can have people on site, we'd feel comfortable with that. So that's how I see us expanding a little bit.
Nice. And so, okay, great. So you're kind of stabilizing your portfolio. You've already gone full cycle. A lot of people, even in this market, haven't gone full cycle yet. And they have, thousands of units. I know of one group that, they broke the 1,000 number, but they've been in acquisition mode and they're just now starting to sell their first ones.
Okay.
It's very interesting. Like, it's just an interesting phenomenon.
Yeah.
So right now, what do you feel like having all of this experience? And I know you do a lot of things, but what do you feel like your superpower is in your real estate business right now? Like, if you had your druthers, like, what would you do all day long regarding real estate?
Yeah, I think it's a little bit of a combination, but I definitely see myself as the visionary CEO of our business. And I think what I can do, I'm not risk adverse. I'm not scared to take chances. And I think I'm able to see a picture that may be complex and see a lot of pieces and form a picture of it in my mind and look at a lot of different pieces and put them together and get comfortable with something. And then, kind of see what people and pieces we need to put together. So just kind of casting that vision, knowing the brokers, knowing, looking at the property. I do like underwriting. So I am that side of it for us, but I can kind of put all these pieces together that might overwhelm people, some people, and condense it down into a picture that makes sense to me and I can get comfortable with, and then kind of cast a vision, to our team and to our investors, to say, hey, it may seem like really complicated, really scary, like there's so much going on, but, we've got our financing here, we've got, this here, and this is how it's going to work. And I can kind of put that together for people.
That's great. That's cool, man.
Yeah.
What's your holding period on the properties that you have right now and that you're looking for? Are you a 3 to 5, 5 to 7? What do you typically look for?
I would say 3 to 5. We've got at least 5 years of fixed debt on all of them. On the loan that we assumed was actually 10 years of fixed debt, and we got it just like a year, or like a half a year into it. So we've got a lot of that one will be probably at least a 5-year hold. The first one we got, honestly, there's a chance we would accept offers this year. We really just bought it right. The lady that had it before us did a really good job. She just wasn't managing it very well. So it's one of those, you just come in and just by managing it better, the NOI is a lot better, but we're kind of going to be capped out. Like we were just kind of looking at the numbers, with my partner. I said, in the next few months, I could see us kind of being to a point where we're like, rents are at market rent. Yeah. There's nothing big to do. It might be time, and it's kind of our least favorite property. It's in the least favorite area. So hopefully we can find, a couple bums from LA to come out and overpay for this.
Right.
Right. They've all moved to Texas, man. So
okay, well we'll go to Texas and find them. So I can see us letting go of that one. I mean, it's a tough thing because the investors, they expect to get paid for 5 years. And you tell them, hey, we're going to double your money in 5 years. That's what we felt confident we could do. And I know we could hit that in 5 years, but we might be able to do like a 35% return for them in 1 year, which is, better than the 20% on average over 5 years. But we gave them our money back. But the nice thing with those guys, again, that was our first deal this year, and it was all close friends and family and stuff. So they'd be fine with that. And honestly, we could potentially even 1031 on that, even though it's difficult. You'd have to get everybody on board. That is potential. So with that one, maybe it makes sense this year. The 96, honestly, that's actually, it's a unique one. It's 24 little brick quads right beside each other, like right in this little cul-de-sac. I love those buildings. This is one I could see us refinancing and holding. Nice. Really, refinancing in 3 years and getting longer term debt and just holding, get the investors a lot of their money back, just because those buildings, early 80s, electric baseboard heat, again, just a brick box on a slab. It's going to hold up. So I kind of want to just hold those and pass them on to the kids someday. So kind of different, kind of like probably a short term, medium term, and long term between these three.
Interesting. And what are your long-term goals? Are you looking to just continue to scale up and grow the company?
Yeah, I think so. I do go back and forth a little bit. I feel like even with syndication, you're kind of going big with syndication, but I do think, my partner and I, we could stay pretty small and we could build up to 500 units, but then sell off 200 and then get another 200. But since we've sold and made some of our own money, we could own more of the next 200. And we could kind of just build this little portfolio of 500 units, but just maybe owning more and more of each of them. And maybe we, everything we've ever bought that I've ever bought is C class. Maybe we kind of go up to B class. So we're not really adding units, but we're, paying more and getting in a nicer class and things like that. Or we could say, hey, our goal is to own 10,000 units and really build a company and really go big. And the more I get into it, the more I get to do, like I said, be kind of the visionary and let my partner specialize. And as much as I love doing it and partnering with people, and I just keep wanting to do bigger and bigger deals, I think we're going to go the 10,000 unit route. At least that's kind of the vision. I really do want to keep scaling up. I want to keep growing the business. I want to keep adding, sometimes that might be partnering. I mean, it's just endless opportunities. As you guys have kind of mentioned, when you go and meet people, you just realize there's so much out there. And I'm excited about doing it. I don't want to slow down or stop. I want to expand and partner and do more, bring in more investors, let more people experience the power of multifamily real estate investing. So yeah, I think we want to keep scaling and keep seeing that exponential growth that you guys talk about.
That's cool. That's very cool. And are you going to any conventions or meetings like everybody that we know right now in multifamilies out in I think in Orlando right now in NMHC?
Yeah.
You doing anything like that over the coming months?
I haven't. I'm like, it's killing me. I really wanted to go to the Best Ever conference out in Denver. Joe Fairless is, Cincinnati guy. And I used to go to his meetup all the time. I think the meetup is still happening. I don't think he's involved anymore. But big fan of him. And I know quite a few people going to that meetup. I don't think I'm going to be able to go. That's the one I really wanted to go to. I feel like he doesn't do a lot of coaching. So I don't think there'll be much selling going on there because I don't think he wants to coach people. So as compared to some of the other ones. But yeah, I do my own podcast. So I've had a lot of great guests and so I know more and more people. So it would just be fun to go to one and just get to see a lot of people in person. But, then you're meeting potential partners, potential capital raisers that could come in on a deal. So I would love to go to one. I'm not scheduled to go to any. Like I say, that best ever one is one I'd really like to go to. I like the real estate radio guys. I think they do some good meetups. I've thought about going to theirs. There's a lot of good ones out there. Have you guys been or plan on going this year?
I was actually looking at Joe Fairless. And I think this week there's one local to us, but I think we missed it, which is called IIRC. I think it's out here.
I know some people going to that. Yeah.
And to be honest with you, we're actually just starting on a couple of deals, and actually we came in last night on a side tour trip. And so I kind of made, I don't know if Zach did this, but I made this calculus like, well, I could be out, at NMHC right now and hobnobbing, but we got our properties and we're going in due diligence on one, and we got to do the work. We got to do the work right now. So that's kind of where we're at.
Yeah. I had I don't know if you guys know Andrew Cushman. He's not a well-known guy. And that's what I really like about him. He's been on Bigger Pockets and he's a stud apartment syndicator, but he does like no marketing. Nobody knows who he is. And I always joke, I'm like, he just buys apartment buildings. That's all he does. He doesn't do any and he did a mastermind for 1 year. And I was so lucky to be a part of it. It was just 30 of us. I learned so much from him, but like nobody knows the guy because he does no coaching, no marketing. He just buys apartment buildings. That's, and like crazy. That's what I want to do. So I just want to follow that guy. I don't care how you do all the other stuff. He just buys apartment buildings. So I think that's always better. If you guys are out there buying, that's better than being in anything else.
Right. Well, man, this has been great. I'm really glad that you took the time to jump on with us and let us hear your story and everything. It's been fantastic.
Yeah, it's been fun. I appreciate you guys having me on.
I really enjoyed the conversation.
You got any good books that you're reading right now that we should know about?
Yeah. Another girl in the space, Julie Holly, recommended 0 to 1 to me by Peter Thiel. That's been good. It's more for people like, I don't know, trying to start up a company, because he talks like going from 0 to 1 is starting something new. Facebook, he was an early investor in Facebook, got that going. And they went from 0 to 1. There was nothing like Facebook and they were the first ones. So buying apartment buildings is like the opposite. People have been doing this forever, but he does talk a lot about like founding your company and kind of some important things to focus on. And my partner and I kind of founded the company, and then I brought him on, but we're still really kind of founding the company. So there was some really good stuff in there for me. And then, just personally and spiritually this year, I feel God really calling me to try to live more in today. Cause I'm just, you can tell, like, I'm always excited about the future and planning and scheming. And so it's kind of hard for me to live in today. And when you have young kids, I think it's important to be present to them today. So I'm reading this book called The Ruthless Elimination of Hurry. And it's written by a guy named John Mark Comer. And that's really good. So
that's cool.
I recommend both of them. Yeah.
You know what we'll do is we'll make sure to make note of those and put those in the show notes for people to pick those up. That last one that you just talked about seems really interesting.
Yeah,
it is. Yeah, it's good.
That's cool.
And how can people find out a little bit more about you if they're interested in reaching out to you?
Yeah, probably the best way is to jump on our website, threefoldrei.com. And that's threefold, spelled out THREEFOLD REI as in realestateinvesting.com. We've got a free ebook there called The 5 Steps to Passive Income for the Full-Time Dad. You can sign up to be, part of our email list. We send out a monthly newsletter, kind of keep you up to date with what's going on and some different things like that. But, also look me up on Facebook and LinkedIn just by my name. I'm pretty active on both of those.
Nice. Great. Well, thank you so much, Lee. Thanks again,
guys.
Yeah, thank you.
We will talk to you soon.
Okay.
All right. Bye. 10X for Gen XYZ is hosted by Zach Winter and Mark Adair Rios, co-founders of Prosperity CRE, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and building long-term wealth. If you like the podcast, please give us a positive rating and subscribe to be notified about future content. Also, if you'd like to learn more about our approach to real estate investing, you can download a free copy of our real estate investment book, Investing for Cash Flow and Long-Term Wealth, by clicking the link in the show notes below. Thank you and stay tuned for our upcoming episodes.